Mr. Brandon Munro, how are we, sir?
I'm well, Matt. How are you doing?
All good. Looking forward to the Easter weekend. Lots of R&R, rest and more rest. What about you? You have Easter weekends over there, don't you?
We do. We have 4 days where the stock market's not open, so I'm looking forward to that.
Yippee-yay-yay. Well, unfortunately, we're here to talk about stock markets and the like. But look, okay, uranium, world of uranium, it kind of feels a little bit quiet, a little bit boring at the moment. Are we expecting more of the same moving forward?
That's a bit rough, Matt. It's not boring in nuclear land at the moment. There is really just so much going on. And I think also for investors, we're used to seeing fireworks in the uranium sector, and we're still grinding higher. There's no doubt about that. Pretty much every day we're seeing new news that's very positive. One of the things that we highlighted on this show maybe a year ago that would be the signs of a real new beginning in nuclear looks like it's made progress this week. And that's it. That's reports that I've seen of a $1.5 billion financing facility to bring the Palisades project back online. Now, this is a closed down nuclear power station. This isn't a reactor that was going to close that got saved. It isn't a reactor that got saved within a couple of months of closing. This is a nuclear power plant that was closed down that's been in cold shutdown mode that now looks like they're going to restart in the US. That's actually a really big deal. That's something that I'm prepared to call exciting, Matt. So I challenge your comment that things have been boring. Maybe in equity markets, it's been a little bit slow as people get sort of used to the idea of a 4-day long weekend, or at least in this part of the world. But the nuclear industry is really moving along at the moment. And I think we will see the spot market and respond. I think April's going to be a good month for the spot market. And I'm pretty confident that next week we'll be talking about another recent high in the term market as well. I just feel that $75, which is the current reported term price, it's understating the reality of what's happening out there in the sector on the ground. So watch this space for a new higher term contracting price in the coming weeks.
Right. And what do things like, what kind of corporate structures like year-end do for the market? We saw, obviously, Japanese traders offloading at a discount. I think that was, broadly, widely attributed as the kind of, the catalyst for the reset in spot price this month. Is there an opportunity moving forward as we move into new calendar years, financial calendar years?
Yes. And I think for everyone out there, what you're referring to, Matt, is the speculation that a lot of the selling that's marched the spot price lower over the last few weeks has been the closing of positions by trading entities that have a 31 March year-end date. And the reason why that's attributed as a reason for some of that selling is that these are entities that are big trading companies. They aren't exclusively uranium trading. They have position limits, they have allocations, and in general, they want to make their uranium exposure look as small as possible at the balance end date for their financial year end. And so naturally, that means that they'll want to close out any positions. Very good chance that they're closing them out in the money. So it's not a painful thing for such entities to do. I've seen that happen in this sector before, so it sounds like a plausible explanation to me as to some of this motivated selling. And the reason why the spot price came back so much is it's very thin out there. There's very little liquidity. And whilst there was a good motivation for that selling, there was limited motivation for buying. And so that motivated selling just simply dropped the price further until we hit mid-80s. And it seems that the market recognized that mid-80s is simply irresistible in the current market setup. And so utilities, we understand that they picked up a bit in mid-80s. Sprott Physical Uranium Trust picked up £50,000 in the mid-80s. And that's all great to be talking about right now, because the next trading day that we're going to see, once this goes to air, will be April. And so whatever the extent of that influence of that 31 March balance date will be no longer. And I think there's some really interesting things happening in April in this sector that traditionally have been, let's say, a motivation for market activity. So for a start, the world nuclear fuel cycle is taking place. Most significantly, it's taking place in probably the heart of supply questions in this sector right now, Almaty, Kazakhstan. So a number of my colleagues who are heading off there are heading off wearing their detective hats, because their primary objective of going there is to find out, well, what really is happening with Kazakh production. So I look forward to being up there, and I look forward to really understanding on the ground how the industry is thinking about Kazakh production, how the industry is thinking about other supply around the world, new picture on demand. There's an awful lot going on. And what this sector tends to see is these big conferences where people get together produces activity. And we're in a phase in this market, Matt, where activity speaks to the upside because it's so thin in spot. Any activity, any motivation, chances are it's going to be motivation to buy rather than motivation to sell. So all other things being equal, I see that activity is likely to push up the spot price. And I feel like, having spent a lot of time talking to institutional investors over the last couple of weeks, as you know, I feel like in Australia, at least, we're moving squarely towards a risk-on mindset from risk-off. The portfolio managers and the analysts right now, they're really looking for opportunities. There's a lot of interest in gold. There's continuing interest in uranium. Many of those fund managers feel like we've seen the bottom in lithium. And I'm sensing that we're in the early stages of, right, this is now a recovery. And the sooner I can act in this recovery, the better my returns are going to be. And there's no lack of quality investable assets out there in other commodities that enable portfolio managers to pounce right now. And I think that generalized optimism, as we see that develop further, as we get a little bit more of a steer from the Fed, that will inevitably drive generalist interest into the uranium sector. And as we've talked about so much before, Matt, what's really different this time around is between the half a dozen different ETFs that are focused on uranium equities and Sprott Physical Uranium Trust plus Yellowcake in the UK, there's enough capacity to absorb enormous amounts of investment into this sector. Now, what happens once that investment is absorbed? It's literally like a funnel. Those ETFs can take as much investment as can realistically be thrown at it from generalist investors. And it's what happens at the bottom of that funnel that just becomes fascinating for equities investors. And we know that because, ETFs hold more than 10% of Bannerman stock. And whenever we see the ETFs recapitalize, it has a big uptick on our liquidity, and inevitably, when they're buying, it has an uptick on our price. And we're no orphan to that in this sector. So I think there's a lot for equity holders to look forward to, particularly over the next 4 to 6 weeks, and something I'll certainly be watching really closely. And no doubt the folks out there, the institutions are watching it. And I think for the retail folks out there having a look at what's happening in this sector, it's a good time. Don't take your eye off the ball right now. I think the next 4 to 6 weeks show a strong chance of being really interesting.
Let's sort of have a little dig around at that from a perspective of maybe people new to uranium investing, is because that kind of opportunity cost around, does the uranium thesis hold up against new entrants again? Bitcoin, does it hold up against the kind of resurging interest in gold? As you say, it seems to be popping its head up and finally actually reacting like it should in an economic crises like we are in at the moment. Let's talk about the demand drivers, because again, for a new audience, we're seeing, as you said, restarts. We're seeing builds of reactors. We're seeing inventories being run down. So all the demand drivers are doing what they need to do. Is it exacerbated? Is it accelerated by the lack of conversation around new production? So I want to kind of jump into, where's the new production coming from? Is there any new news? Is there any hope that this yawning gap between demand and supply currently is going to change radically anytime soon?
Okay, so for the people new to the thesis, welcome. And the first fundamental thing to understand about demand and supply is, unlike most other commodities, the existing demand is already locked in. It's locked in because these are nuclear power plants that have been built with a lot of capital up front, with a low operating cost, and they simply have to have fuel. Nobody in the current world wants to have a nuclear power plant that's not operating at optimum capacity. And so that gives you a really strong baseline. And the uranium that's mined around the world is only used for nuclear power, and nuclear power can only run on uranium as an unsubstitutable fuel source. So there's a very direct relationship between the existing fleet of nuclear power plants around the world and the demand for uranium. Now, on top of that, there's, I think it's the latest count, 62 reactors that are currently under construction around the world. So they, over the next 5 years, will all have immediate demand for their uranium, and the same applies. You don't want to build a nuclear power plant and not have it running with a full capacity. Now, the point for new people to this thesis is that that's a demand that is baked in. It's entirely reliable, and there isn't enough uranium mined around the world today to even meet that demand. So then you talk about, well, what happens if Palisades restarts, and what happens if that creates the basis for other shuttered nuclear power plants around the world to restart? What happens if there's a new raft of new builds that are proposed? China at the moment is announcing the construction of 10 nuclear power plants a year right now, and the permitting thereof. Other parts of the world are coming to nuclear power for the very first time. So, for example, the UAE has just turned on the last of their initial 4-reactor nuclear power plant, 5.6 gigawatts at Breakout. So the demand picture that I just described, whilst it might not be impacting uranium sales this year, it's fairly reliable, and that puts additional pressure on that supply gap that I just described. Then you start going out a little bit further, let's say 5 years from now, and if the world functions like the world really needs to, there will be a huge uptick in new demand for uranium in China and other parts of the world as well, just at a point where small modular reactors are coming in to turbocharge that demand growth. That's a nice to have for the uranium thesis right now. That's something that will, I believe, elongate the current bull market that we're in uranium. But for someone coming to this new and wondering if they need to reallocate away from their Bitcoin fortune or choose between uranium and gold or whatever it is, that's cherry on the top. You don't need to have a firm view on what the future demand needs to look like to understand the core of the uranium investment thesis, which is today there isn't enough uranium mined in the world to replace the uranium that's consumed in the nuclear power plants in the world. So then we move to supply. To your point, Matt, what's going to change? Well, what I think the utility customers around the world had hoped would change is they hoped that the world's biggest single production center, Kazakhstan, would ramp up its supply by about 9 million pounds this year, and by about the same again in 2025. And at the beginning of this year, we got the first direct signs from Kazatomprom that that wasn't going to happen. And since then, we've learned that they don't expect to be able to increase supply this year, and they're, I think, signposted sufficiently to give them the ability to walk back any increases, or certainly the planned increases in 2025. So that's not a supply response that we are going to see. Most of the restarts have taken the opportunity to get back into business, and obviously it's easier to restart a mothballed mine than it is to build a new one. But as we stand today, I can't name any significant greenfields development that's been given the green light. In fact, we've gone backwards in the last year because of inevitable delays to greenfields projects in Niger because of the challenging situation there. So there hasn't been a direct supply response with new production, certainly in the West or in the investable universe yet. And we've seen uranium go through three figures, the uranium spot price into the hundreds without that. So what does that tell you? Number one, it tells you that a lot of the supply that perhaps gets put into a model as being very readily producible at $50 or $60 or $70 uranium probably isn't as producible as the world's led to believe. And that's something that you've been saying for quite some time, Matt. It's much easier for you to make that point than me to make that point about people who might be my peers, but I think that's a fair comment. Now, of the quality companies, and I certainly would include Bannerman's a Tango asset here, of the quality assets out there that can produce, well, it would appear that many of those are taking an attitude that's similar to ours, which is, well, even though we're seeing $75 uranium in a term contract right now, do we really need to be offering our uranium at that price? Because when you look at that supply and demand picture that I described, our shareholders have been very patient for a long time. And are they really being adequately rewarded with us to jump at $75 uranium when by being patient for a little bit longer, we might be able to achieve something that's, I think, a fairer recompense for our investors' patience and risk over the years. So the production that is ready to come on board, I think, sees a stronger pricing dynamic over time and is therefore reluctant to start committing shareholders to the current pricing environment that we see right now or that's reported right now. Over time, yes, it will correct. The question is, what does the pricing incentive need to be to cause that correction? There are some very good discoveries being made in the uranium world at the moment. And over time, those discoveries will support the fleet of nuclear power, I've got no doubt. There's some amazing discoveries being made in Canada, the Athabasca, for example. That's probably the best indicator. But we also know that it takes a long time. So a discovery made today in the Athabasca, we're not going to see that in production within 10 years. That's just how it rolls in Canada. It's a discovery made 5 years ago, still probably 5 years at least away from entering into development in that environment. So there's a period of time where it's going to be very exciting for uranium investors as the true consequences of a supply-demand deficit start to bite. Those consequences haven't been tested yet. Yes, we've had a spot price in the hundreds, and that's perhaps given us an indicator or a flavour of how quickly and how volatile prices can be, how quickly they can go up and how volatile they can be in this sector. But that's not as a result of testing a supply deficit. That's not as a result of end user utilities needing to come to grips with the real prospect of needing to outbid their peers to make sure that they can continue producing electricity from their reactors. That's a very different situation. Whether that gets tested over a period of 1 or 2 years, I feel very positive about 2024 and 2025, or whether that's a situation that creates sustained pricing pressure over a decade is going to depend a little bit on what I said before about this new coming demand into the sector. If that new coming demand is totally underwhelming, then within a few years, I think with Canadian projects coming on board, we can probably start to get closer to a supply-demand balance. But I think there's a very good chance that what we'll see in this sector is a less pessimistic view of new demand being created, and that new demand will run faster than the optimistic view of what these new assets can come in and start producing. And we're hearing that from many different quarters, saying things like this sector is going to need several next gens to be discovered and brought into production to continue meeting that demand growth. And in that scenario, I think we're talking about a super cycle. I think we're talking about a bull market cycle that at least reflects the longevity of the very desperate bear market cycle that we saw from 2011 until only a year or two ago.
Yeah, that's great. Geopolitics, as ever, great. Market sentiment, great. If I'm a shareholder at the moment, I say, Mike, so opening salvo to you, at the beginning of this was it just kind of feels like there's not much going on. You've countered that and said, well, actually, there's a lot in the background. So what should I do or think? Because if I look at some of the commentary out there, it's like, it's uranium's had its time in the sun. There's nowhere for it to go, and I'm getting distracted by other things now. How should I think of uranium as a broad investor, not your shareholders, but more broadly? We've mentioned the word patience a lot in the past. Are we still on patience, or is there more to it now?
No, Matt, I'm just not hearing that perspective that you just outlined. Maybe it's I'm not spending enough time on social media these days, but I've had a lot of conversations. I've spent tens of hours talking to institutional investors over the last couple of weeks, and I didn't get that raised once. Now, okay, you've got the skeptics out there will say, well, of course not, because you were talking to the ones who were happy to accept the meeting or happy to come and talk to the function. Okay, fine. But the point is, there was still almost an unlimited supply of fund managers and analysts who were happy to talk to me, who had a very strong view, and they didn't even raise those types of issues. The only skeptical question that I got was, well, how long's the duration? And hence the answer for newbies that I just gave. The duration does depend a little bit on new demand, but you don't have to be a raging optimist to foresee that new demand is going to grow faster than new supply can come in, even with some of these fabulous projects that over time can be developed in Canada. I'm not getting that bear case at the moment. And in terms of patience, well, you've got to be real careful on patience as an investor. It's a bit different for retail because, apart from the regret of missing an opportunity, you don't have a lot at stake. Whereas that, like, for example, the portfolio managers that I'm talking to, it's really competitive out there. So they can't afford to be underinvested if uranium gaps up again, because their quarter will look really sick compared to all of their competitors. And it's so competitive out there in funds management that all of these institutions, they're not so worried about making money. They're terrified about making less money and generating less returns than their competitors and their peers, because it's so competitive, and they mark to market and report their returns so regularly. So I don't feel like there's an opportunity for a lot of patience right now. And we've seen that even in Bannerman's share price. Just, 2 weeks ago, we were trading at $2.80, and now on a big uptick in volume, we entered the ASX 300, and now we're trading at $3.70. So that doesn't tell me that it's a time for sitting on your hands and waiting and watching what's going on around you. That, for many, I think, professional investors, that's telling them that, to use a bit of a cliche, that the train's pulling away from the station.
There we go. Let's end on that very positive.
You got a bit distracted placing orders, did you, Matt?
Bye. I was getting distracted by gardeners. Answers.
Where do I plant this?
I know it's bank holiday weekend, and yeah, there we go. I've got tough decisions based on planting, and I think I've placed my bets. I'm very happy long term shareholder in the space, and continue to be. It'll be interesting to see if what April gives back in terms of pricing, gives back in terms of interest. As you say, I think it's nice to see all those institutional investors leaning into the space, and they actually starting to place decent size bets, as we've seen recently. We talked about last time out. And retail, be patient, you will be rewarded.
Well, hopefully, Matt, I've managed to plant a few seeds for people with this conversation.